everybody. Welcome to a Friday afternoon webinar. We got an exciting one for you guys today with one of my personal buddies here over at Physicians Mutual, Trevor Braun. Look, they have some very unique products. I think they've positioned themselves really well in the market. Honestly, it's one of the products that I sell monthly. So I'm also invested as an agent myself. So for those of you who are not familiar with me, my name's Rob Valencius. I am the national agent trainer. I'm also the marketing and development coordinator. I wear many hats here at Pinnacle, but today I am the national trainer when we're going over this stuff. A couple housekeeping notes. Keep in mind, this is listen only mode. Look, I don't know about you guys, been doing a lot of these since COVID. I don't want to hear any dogs barking, babies crying, garage doors. I mean, you name it, we've heard it on these calls. So that does not mean you can't ask a question. I will be fielding questions throughout the presentation, and we will get to them whenever our buddy here, Trevor, is, ready to go on that front. And then, this is being recorded. So if you got to jump off, do not feel like you're abandoning the webinar. We will get the system sends out an email within 24 hours that has a link that has access to the recording. Plus, this will be on our YouTube channel, which I highly encourage everybody to follow if you are not already doing so. With that being said, Trevor, you all set over there, man? I'll kick it over to you.
Brother Rob, I appreciate you, man. Can you see my screen all right?
I can, man. Big old Physicians Mutual logo. We love it.
Good old Physicians Mutual, man. Thank you, as always, for the very warm and flattering introduction, brother. And not only an agent, but a policyholder, too, if I'm not mistaken.
I am also on the dental plan, which is great. I love it.
Oh, I thought it was the Medicare supplement, man. I'm sorry. I know you're not quite there yet. I know you're not quite there yet. I'm picking on you. I am picking on you, but no, thank you very, very much, man. Absolutely love visiting with all of my friends over at Pinnacle. Hopefully some folks on this call are going to be in Vegas in March next month. Looking forward to seeing a lot of you guys. Looking forward to seeing some of my old friends, meeting some new folks, and just really excited. So thank you all for giving up a little bit of your Friday afternoon to either get a review or learn for the first time some of the unique qualities that Physicians Mutual has that Mr. Rob was alluding to. So as I like to start off all of these trainings, I like to start with our product availability map. So this is going to show all of the areas in the United States where Physicians Mutual has product. Now, today we are going to focus on some exclusive med sup stuff, as well as what I would argue is the best individual dental out there on the market, or should I say the most comprehensive individual dental out there on the market. You can see we are in most, but not all states. And just a couple of quick updates, guys. So Physicians Mutual is terming this the year of the launch, because we do have some really neat stuff coming out, some that'll directly impact you guys, some that'll roll up and have some really positive impact on uplines, so on and so forth. But really the direct impact on agents is sometime in May. We do plan on rolling out in most every state a new life insurance product for Physicians Mutual. And that life insurance product is going to be a whole life term blend, with the whole life amounts being able to go as low as 15,000, as high as 100,000, and then there is a term rider option, and the term amounts and availability will be based on age, but the base whole life policy is going to be 45 to 80, so it will be geared towards the senior market, and it's going to be geared towards that senior who not only is looking for maybe some final or burial type expenses. Of course, we all want to get out of this world in the same way we came into it, not owing anybody anything, but also a pretty staggering number of seniors these days, as I'm sure you're all aware, because we're all in the same market. We're dealing with a variety of things that maybe the senior of old did not, whether it be consumer debt, whether it be mortgages, whether it be taking care of grandkids, kids, older, aging parents, whatever it may be, and having an opportunity to be able to cover a lot of that with a very affordable term rider option there. So really, really neat stuff coming to that front. It will be a simplified issue. So most applications will either issue or decline. You'll have an answer within a few minutes of submitting the application versus having to hunt down medical records and do parameds and so on and so forth. So it's going to be a really, really neat product. So as we continue to get closer and closer, we'll have trainings, we'll have rollout opportunities, so on and so forth. And then fast forwarding to July, we do have a new Med Sup portfolio that is coming to as many states as will approve it for July. But, currently, vast majority of our states are the black Tic Tac, which is under the Physician Select Charter, one of our subsidiaries, and then the red and the orange Tic Tac under our Physicians Life company, one of our subsidiaries. We are rolling everything back to the actual Physicians Mutual paper in July. We are going to keep a lot of the innovation, if not all of the innovation that we're going to talk about today, hopefully add some of that innovation to some states that doesn't currently have it, namely Florida, Georgia, Kentucky with our innovative plan, preventive care, Silver and Fit, things like that, expanding to a couple of different markets, looking to get some Med Sup in a couple of more of those northeastern states. So all of that to say, we should have very competitive price points, especially on the innovative. We plan to have our innovative G be the lowest price G in every possible market that we operate in. So lots of really, really good stuff to look forward to. But hey, we've still got seniors to help and sales to make between now and then. So that is what we are going to focus on for the remainder of today's webinar. So without further ado, guys, our suite of Medicare supplement products. Now, do understand in all states, we do also have the Plan F offering for individuals who were eligible for Medicare prior to January 1 of 2020. What we're looking at now, of course, is going to be our main product offerings. Hopefully everybody on this call is very familiar with your good old standard Plan G. Of course, since the Plan F kind of went by the wayside, the Plan G is the most comprehensive Medicare supplement available today, going to cover everything that Medicare approves but does not cover other than that 283 Medicare Part B deductible, okay? I think that's enough explanation for the G. Now, the high deductible G. Guys, I'm going to tell you right now, if you're not comfortable with the high deductible, get comfortable with the high deductible, get comfortable with the notion of fact finding, cross-selling other products, whether it be a hospital indemnity plan, a cancer specified disease plan, some life insurance, some dental insurance, all of those things around the high deductible for a couple of different reasons. One, and the most important is a lot of your clients have those needs. And having a super low premium on a high deductible type plan is going to open up some wallet share for the customer to be able to cover a lot of those other needs. Another major point of it is, just depending on where you're at in your business and what your major demographic is, there are several people out there that don't want to necessarily pay full premium for a Plan G, but they also don't want to necessarily compromise any freedom and control that they have over their health care by going to the Medicare Advantage side. Not villainizing Medicare Advantage, it's just not for everyone, right? The high deductible gives a wonderful, wonderful option that will be in most markets about a third of the premium of the standard G, capping their out-of-pocket at $29.50, which is substantially lower than most, if not all, MAs out there right now, and then still maintaining that freedom of choice, that freedom of control. I actually did a little research the other day, and not super shocking to me, but when you're talking about original Medicare and Medicare supplements from a provider standpoint, about 98% of healthcare providers nationwide actually accept original Medicare. And of course, the supplement would follow, unless you're dealing with a select situation. We're talking about true med subs. And only 48% of healthcare providers nationwide accept Medicare Advantage. So 98% original Medicare versus less than half, 48% of healthcare providers accepting Medicare Advantage. So just an interesting little aside there from an access to care perspective. So I think one thing that gets a lot of agents and customers hung up is really that word deductible, and also really how that deductible works. And we will dive into it a little bit more deeply here in a moment, but just at face value, yes, it is a planned deductible, but the plan, the Medicare supplement, is secondary to Medicare, right? So if you have a client who's on original Medicare A and B, original Medicare is going to be primary, they're going to pay first, and then the supplement is going to be secondary. So with that being said, as I'm going through this training for both the high deductible, and then we're really going to spend a lot of time on the innovative, because that is exclusive to physicians, mutually have a patent on it. But think about that plan deductible more like an out-of-pocket maximum, because the way that it's going to work is kind of similar to traditional health insurance, where the customer is going to have deductibles and coinsurance, of course, Medicare Part A and or Part B deductibles and coinsurance, up to that max out of pocket of $29.50. Now, on that traditional high deductible G, that plan deductible, that out of pocket max, will reset every single January for the life of the policy. Okay. Now that may, turn some customers off, just knowing that typically the older we get, the sicker we get, the more stuff falls apart, the more expensive it gets to fix. Maybe they're comfortable with that plan deductible now, but as they're looking into the future, not having a crystal ball, that may be uncomfortable having that plan deductible for the life of the policy, but some people are cool with it, right? So in comes the innovative G. As I said, this plan is exclusive to us. We do have a patent on this. We patented and introduced this plan to the market in 2008. And as you can see, other than it being shaded a different color than the high deductible plan and the G plan, it looks identical to the high deductible G. The reason for that is the plan initially starts out as high deductible plan G benefits. So it's going to have the same exact $29.50 out of pocket max. It's going to work the same exact way with the customer paying Medicare Part A and or Part B's deductibles, coinsurance up to that out of pocket max. The major difference is that $29.50 is not for the life of the policy. Okay. That plan deductible, that out of pocket maximum, will reset until January 1st following the second policy anniversary, at which point that plan deductible will disappear forever, leaving that customer with full-blown Plan G benefits for the rest of their life at a discounted premium for life. I'm going to say that again. It will automatically go away. The high deductible, the out-of-pocket max will automatically go away in 2 to 3 years, leaving the customer with regular full Plan G benefits for the rest of their life at a discounted premium for life. So as we look at some deductible examples, because no matter how many different ways you say it, visuals help, okay, because this is a new concept for most people. The easiest way, in my opinion, to look at it is the customer will have that plan deductible for the remainder of the first year, from whatever the effective date is to December 31st of that year, followed by the next 2 consecutive years, at which point that following January, that deductible is going to go away, automatically becoming the standard G for the rest of their life at that discounted premium. So we could have put 12 examples here, figured you guys were astute enough to be able to fill in the blanks. So we've got a beginning, middle, and end of the year example. So if you got an individual that took an innovative with an effective date of 1/1 of 26, well, it's 12 months in that year. So that first year is going to be a full 12 months because of the effective date, followed by the next 2 consecutive years, 3 full years, going away January 1 of 2029, leaving them with that full plan G with the discounted premium for life. If we look at same year, 2026, but a July example, now we're halfway through the year. So we've only got half of the year left in that first year, 6 months, followed by the next 2 consecutive years. Therefore, that individual would have a 2-year, 6-month deductible period, still going away January 1 of 2029, leaving that customer with full-blown Plan G benefits for the rest of their life at that discounted premium for life. And then last would be a December effective date example. Now we've only got 1 month left in the year. Next 2 consecutive years, that deductible period for that person would be 2 years and 1 month. Okay, that plan deductible still going away January 1 of 2029, leaving that customer with full-blown Plan G benefits for the rest of their life at a discounted premium for life. Okay, any questions in the chat yet, Big Rob?
I do not see anything yet.
Okay, cool. No problem. Just kind of every now and then I'll pause and ask.
You're crushing it.
Appreciate you, my brother. All right. So the whole purpose of this plan is to help to lower premium cost for life. Again, we're all in the Medicare market. We've all seen over the last year or two some of the turmoil, if you will, especially with rate increases. You know, I mean, there are significant pressures on both the Medicare, original Medicare, Medicare supplement, and the Medicare Advantage side. So being able to have a hybrid product like this that does give a little bit of cost sharing early on to be able to have the most comprehensive Medicare supplement going forward for a discounted premium for life. This is an absolutely fantastic option for a lot of folks. Now, somebody that's coming into Medicare that's undergoing chemo or undergoing kidney dialysis, this is probably not the plan for them. But for folks who are even relatively healthy, and we'll look at this a little bit further in a moment, the innovative can be an extremely fantastic option. So again, it's going to lower those premium costs for life, provide a deductible that automatically goes away. And what some of you may be thinking is, okay, that all sounds great, but what if they get sick in those first 2 to 3 years, right? Well, we don't know that, nor does the client. However, we have built in a little back door, a little safety lever here in the innovative, where if for any reason, whether their comfort level changes, their finances change, their health changes, if at any reason during that deductible period, that first 2 years and 1 month to 3 years, that the client no longer wants to have that plan deductible, with a signed letter sent to our home office, we will actually move them up to the regular Plan G the first of the following month following the receipt of that letter without medical underwriting. Okay, so again, I will say it again, at any point during that deductible period, for any reason, if the customer doesn't want that plan deductible anymore, we can get a letter to home office, signed, dated, home office, first of the following month, we'll put them on that full-blown Plan G with no medical underwriting. Now, if they exercise that right to drop the rider early, not only will they go up to the full-blown Plan G benefits, but they would also jump up to that full-blown Plan G premium. All right, which, hey, the cost might offset. That's fine. That's no problem. That's personal decision. Okay. However, if they allow that deductible to play out and fall off automatically January 1st in any 2026 example of 2029, that's where they're going to see that lifetime savings. Okay. But it's just really neat to know that they are not locked in if their health changes. Really low risk on the customer, guys. So when we really talk about the power of the innovative, all of the other stuff is great, but where the rubber meets the road is the savings, okay? We have to be able to substantiate the savings. Now, where a lot of times agents get into, I guess, their own head, or the customer gets into their own head, is they look at the, let's say in this example, let's round it up, $450 difference in premium. Well, if you're just looking at the first year or two, does under 500 bucks, 439 bucks in premium difference justify the potential 2950 out of pocket? Absolutely not. So we have to get into the habit, which we should be doing anyway with all of our senior sales, of not only looking at today, but looking at 10, 15 years down the road. Because let's face it, I mean, when you're looking at national averages for someone who reaches age 65, on average, they're going to live to age 80. So when you project this thing out 15 years, you take into consideration that the plans are only different in benefits for the first 2 years and 1 month to 3 years, leaving the next 12 to 13 years of the plan being identical. And then you take a look at the premium savings once they've reached age 80, that it makes a lot more sense. So what we like to talk about is, you've got twin sisters, right? They sit down with Mr. Rob, they go over all their plan options, they decide, you know what, we like Physicians Mutual. One of the sisters takes the Innovative, the other sister takes the Standard G. They're going along, they're going along. Well, regardless of the effective date, by the time these ladies are 68, the sister with the Innovative G's plan has now become a Standard Plan G, and will remain so, just like her sister who took it from day one, for the remainder of this example, or the remainder of their life, okay? And assuming that both of these young ladies reach the ripe young age of 80 years young, the sister that took the Innovative would have saved, with this example, $11,287.70. Okay, now that makes a lot more financial sense than just looking at the first year or two. Now, I get it. We are taking into account some averages, right? There are some unknowns. Whether they get sick or not in the beginning, whether they live to age 80. But even if sister that took the Innovative maxed the plan deductible out in all of the first 3 years, she still saved 2,100 bucks in premium if she lives to age 80. So as long as the customer lives long enough, basically what I'm trying to say is, there's not a scenario in the world where the Innovative would not have been a better buy. Okay, but again, we've got to be willing to project that stuff out long term. And I don't know about you guys, but by the time I'm 80 for my full plan G benefits, I would much rather be paying $225 than $316, right? So, any questions in the chat yet, Rob?
I don't see anything.
Cool. All right. So I kind of alluded to this slide a little bit earlier, but making sure that we really understand that relationship between original Medicare as primary and the Medicare supplement as secondary, and how that plan deductible, i.e. out-of-pocket max, really fits into the picture. So is it really a deductible? Yes, but it's a secondary deductible. Medicare is primary and always pays first, right? The other thing we really need to consider is, and we'll play a little game in just a minute. We'll see what you guys think. We'll see how sharp you are. But we have to also understand that when working with Medicare, we're working with Medicare approved amounts, which whether you realize it or not, or it comes to the top of your mind or not, Medicare approved amounts are going to be much, much, much lower than what people are traditionally used to seeing and paying on under 65 health insurance, whether it's group, whether it's individual, whatever, okay? So in this example, let's assume that the customer has met their Medicare Part B deductible. They have a Part B charge of $1,000. Medicare approved $1,000, right? So as long as we understand how Medicare works, once an individual has met that Medicare Part B deductible, Medicare pays 80% of all eligible covered charges for the rest of the year, as long as it falls under Part B, right? So in this example, $1,000 is not going towards the out-of-pocket max of the innovative or the high deductible. 200 is, because Medicare is eating 80% or $800 of that $1,000 that Medicare approved. So as you can see, it would take a ton of Part B bills to even get remotely close with that 20% on Medicare's negotiated rate to hitting that out-of-pocket max. Okay. So as I mentioned, we've been doing this thing since 2008. Looking back at some stats, another frequently asked question, will I be out $29.50 every year? The answer is maybe, but probably not. So looking all the way back 18 years, guys, on average, $518 per year out of pocket towards that out of pocket max. And over the first 3 years combined, it's $1,553 out of pocket on average. Okay. Of course, that's taken into account folks that maxed it out and folks that never touched it, never were in between. So when you look at the percentage of customers who, in the example here, did meet, I prefer to talk about did not meet, 97% of customers statistically do not max out that plan's deductible in year one, and 82% of individuals never max it out in any one of those first 3 years. Okay, you got to think about it, guys. This is going to attract a healthier client. And if the client becomes too unhealthy during this time, they're going to jump ship to the standard plan G, just leaving more and more healthy individuals on this block, which is why the loss ratios are so low. I was doing a webinar for another AmeriLife affiliate the other day, and the head of Medicare was on there with me, and she had been doing a training for their staff just the day before, and was in CSG going through a deep dive, going through some loss ratios, and pointed out that in her state, the state of Indiana, Physicians Mutual's Innovative G, just because of the nature of how healthy of a block of business it is, only had a 56% loss ratio, whereas most carriers, most of the big name carriers over there with their regular G had up to, and in some cases over 115% loss ratio, meaning that even with rate increases they took last year, they're still losing 15 cents on every dollar of Medicare supplement premium that's coming in the door. Okay, so that's another big reason that the Innovative is wonderful long term, is because just by the nature of its design, it should keep that cost lower for the member, not only against Physicians Mutual's Plan G, but against other carriers' Plan Gs as well. Okay. Now, little history lesson, because you may wonder, well, how much has this deductible gone up over the years? So as I said, we started this in 2008. As you can see, back in 2008, that plan's deductible was $1,900. So just now this year, because last year was $2,870, this year, over that 18-year period, it's taken 18 years to get more than $1,000 in increase in that plan deductible annually. Okay, so $1,900 in 2008, $2,950 in 2026. Okay. Oh, didn't want to do that yet. All right, so I want to play a quick little game with you guys, and this will require some brave people to type something in the chat. But in your experience, what would you say that on a Medicare Advantage plan that an MRI would cost out of pocket for the member? And what I want to do is compare that to original Medicare's cost without a supplement. See what you guys think. We got to have some brave soul that types something in the chat, Rob.
Hold on, we got something. Claudia says 450.
Claudia says 450. I applaud your brave soul there, Claudia. All right, now can somebody?
Andre says 600. Don says 120.
Okay, all right. So let's go 120 to 600. Will somebody, maybe you three that were brave enough to do it, put in the chat, what would you think that would cost on original Medicare without a supplement, or on original Medicare if they had a high deductible or an Innovative G? what would that out-of-pocket be compared to an MA plan?
Andre says 600.
Okay. Okay. Is that our one and final answer? All right. So remember, guys, Medicare's negotiated rate is a lot lower than most people realize. Now, if you're not familiar with Medicare.gov's procedure price lookup tool, it is really neat. What you can do when you're kind of looking at differences, I did this in a training the other day, but you can have two tabs open, one for Medicare.gov's procedure price lookup tool. You can have another tab open with Medicare.gov and, looking at some of the popular MA plans in your area. And you can kind of go through this exercise just so you have an idea of what the difference in costs look like. Because surely, at least in my experience, most people would think, well, surely on a Medicare Advantage plan, it's going to be less out of pocket than it would be on original Medicare by itself. Or if somebody had a high deductible or innovative and they hadn't met that plan deductible yet. The truth is, in most cases, it's just simply not. So if you look at an MRI of the spinal canal lumbar with contrast on an ambulatory surgical center, it's going to cost the patient $55 out of pocket. Okay, and again, this is without a supplement, or if they had the innovative or high deductible and hadn't met their supplement, this is their co-insurance. Okay, or if they went inpatient hospital, $92. Okay, so all of this to illustrate, and I've got some more examples, but the out-of-pocket on original Medicare, especially when it comes to Part B, is not as much as most people think. So all of this is really illustrating the fact that that out-of-pocket maximum in the innovative and the high deductible, unless somebody has a major hospital stay, probably ain't that big of a deal for most people, okay? Especially in comparison to the MA side, typically being larger. You've got the prior authorizations, you've got the network restrictions, so on and so forth. So let's look at an ultrasound, 17 to 26 bucks. Let's look at a tumor removal during a colonoscopy, 171 to 273 bucks. What about a chest x-ray? $4. You can't even buy a freaking pack of gum for $4 these days, okay? Shoulder surgery, of course, a rotator cuff repair has to be in the thousands. No, $899 to $1,500. Meniscus repair in the knee, $470 to $783. So again, guys, the more you know, take note of the procedure price lookup tool. Go and play with it. You can look it up by either the name or the CPT code of the procedure. It is not an exhaustive list, but it is something kind of neat to play around with. And again, just get yourself comfortable with that notion of it. For most people, it's okay to, especially in the early goings of their Medicare journey, to have a little bit of out of pocket. Because statistically, the spike in hospital stays doesn't really start until the mid-70s. So you could actually argue, now again, it's generalities, so or averages, but you could argue that for most people that are under 70, having a full-blown Plan G is overly insured, okay? Now, again, we don't have a crystal ball, but that's kind of the neat thing about that innovative. They can jump to that whenever they want. Now, another major piece of it, and I'm sorry, any of you that are broadcasting from PA did not approve our preventive care in most states. Now, we still have regular old preventive care that any med sup would, but in most states, either built into the policy or offered as a rider, we have unlimited preventive care. So whether Medicare approves it or not, if it's coded preventive, we're going to cover it at 100%. And then also access to Silver and Fit. Now, that is something that PA has built into every supplement, is access to the Silver and Fit program or Silver and Fit membership, the free gyms, and all the other wonderful wellness that comes along with Silver and Fit. Some other states have it built in, some other states have it encompassed in the rider along with the preventive care. But just some wonderful added value outside of just the regular old med sup offerings. And especially when you can combine this with the innovative, preventive care does not go towards any deductible. It is paid 100% from first dollar. So even if they had the innovative or the high deductible in states where we have the preventive care, if it's coded preventive, they'll still never pay a penny out of pocket for those services. Okay. So before I move on to a few minutes on the dental, do we have any additional questions on specifically the innovative Plan G? All right, I've got to jump to my dental PowerPoint real quick. Okay. So with Physicians Mutual's Dental, it is a PPO. So they can absolutely go to any dentist that they want to. However, just like any PPO, if they go in network, they will get a lot more bang for their buck. So it is a true Physicians Mutual plan, but we piggyback off of the Emeritus Dental Network, which is one of, if not the largest dental networks in the nation. And when they go in network, the more bang for their buck on average is 36% discount on covered services, okay? Now, getting into the meat and potatoes of this, doing this for almost 20 years, one of the resounding things that I've heard from agents over the years is, I don't believe in dental insurance because I haven't found one that I would buy for myself. And this plan has certainly changed the tone or the tune of a lot of agents out there. I know you heard Rob giving it some props here just a moment ago, but what can you expect from every plan? Physicians Mutual has 4 plan offerings on the dental side. Each one of those plans is going to pay 100% for preventive care when using a network dentist. All preventive and basic care services are immediate, so no waiting period on preventive and basic. And major benefits, major care benefits start after a 12-month wait. Now, question always comes up, if they've got other dental coverage, do you waive the 12-month wait on major? The answer is no, and you're going to see why in a moment. We have no deductible on any of our plans, which is pretty unique out there in the dental space. And hope you're all sitting down. We have no maximum, no cap on our benefits. Okay, now, as far as no cap goes for individual dental, I don't know of another one out there that does that. Now, caveat to that, the one thing that we do have a cap on, and it's not annual, it is a lifetime maximum, that is implants. Now, when I refer to implants, I am referring to the actual physical implant, the post itself. I'm not referring to the extraction of the original tooth. I'm not referring to the crown and crown buildup and some of these other codes, these other procedures that are going to be done around the dental implant, specifically the dental implant. The cap on that is $1,000 lifetime max. Now, after they bought the policy, there's no specific time frame, but at some point, the member will get an offer to increase that coverage to a $2,000 lifetime max for implants. So do know that. But everything else, all of the other procedural codes around the implant would fall under the major care benefit of the plan with no cap. Okay. So with that being said, as I said, we got 4 plan offerings. We've got the Premier, the Preferred, the Standard, and the Economy. Now, the Premier makes up over 80% of the dental insurance that we sell here at Physicians Mutual. So I would strongly suggest leading with the Premier. Now, when it comes to a dental sales pitch, really dental, don't overcomplicate it. Don't get into the weeds too much. It's not as complicated as explaining Medicare. It's not as complicated as doing an estate planning with life insurance or going through somebody's 401k and putting them in a fixed indexed annuity. It's dang dental insurance. So what I've come to know for me as the most effective way to present the dental is, hey, look, Physicians Mutual has a phenomenal dental product. Over 80% of customers do get their Premier plan. And on that Premier plan, it's going to give you access to 100% preventive care in network immediately. It's going to give you access to 70% of your basic care in network immediately. And after 12 months, it's going to pay 70% of your major benefits. And this plan is one of the only ones on the market that has no deductible, and the only one that I'm aware of that has no maximum or no capped dollar amount on the benefits. Okay. The Premier plan in most states costs $56.50, and it's $8.95 to add vision and hearing. Do you think you want this plan with or without vision and hearing? That's simple. Okay. Maybe a 60 to 90 second explanation. Now, most people, again, 80+% of people are going to say, yes, sign me up for the Premier. And then it's just whether or not they need the vision and hearing, which is only $8.95 for a total of $65 and change. If they balk at that premium, well, no problem. That's why they have 3 other options. They've got the preferred, the standard, and economy. All 3 of those are still going to pay 100% in network for preventive care immediately. And when it comes to basic and major treatment, the preferred is going to pay roughly 55%, the standard roughly 40, and the economy roughly 25. Why I say roughly for those basic and major benefits is because those 3 plans for basic and major actually pay a set dollar amount, not an actual percentage per procedure. So what we did is we just took those set dollar amounts, compared that to the national average within the network benefits, and came out with a rough percentage, just so you can have an idea. Okay. Now the preferred is going to run you about $46 a month, the standard about 38, the economy about 30. You can still add vision and hearing to any one of those. Which one do you think makes most sense for you? Okay. So very easy to explain. Fantastic benefits. You know, again, the fact that it has no deductible and no overall cap make it very, very unique in the market. And as we look at a couple of more slides before we take any questions and let y'all get to y'all's weekend, on the vision and hearing side, for this is a rider. Okay, so they can't buy this standalone. They can't separate the vision and hearing. If they have the base dental, then they can add this as a rider, combined $8.95. For eye exams, the member will get up to $100 per person per year. After 3 months, they will get up to $150 per person per year for glasses, contact lenses, so on and so forth. And then on the hearing benefit side, every year up to $75 per person. And after a 12-month wait, up to $500 per hearing aid per ear. And that particular hearing aid benefit will reset every 5 years. Now, similar to the relationship between the dental and the Emeritus network is the relationship between the vision and the VSP network. In other words, again, with our dental, it's PPO. They can go anywhere, but if they stay within Emeritus, they're going to get discount. Same thing with the vision. Member can go anywhere, but if the provider happens to participate in the VSP network, then they'll get the benefits on top of the VSP discounts. Okay. Now, another thing that a lot of agents ask or wonder is, hey, is this just for seniors? Is this just for people on Medicare? The answer is no. This can be sold to people of all ages. In most states, if somebody is 18 or older, they're going to need to be on their own plan. Otherwise, they can be a dependent. We can do an individual. We can do an individual plus spouse. We can do a 1 parent with 1 or multiple dependents, and we can do an all family, okay? 2 parents with 1 or multiple dependents. We can do the dental by itself. We can do the dental with vision and hearing. And then there is a wonderful little discount there for people that have a Physicians Mutual Medicare supplement, in a great way for you to bring it up as a cross-sale opportunity. Hey, Mr. and Miss Prospect, now that you've gotten your Medicare supplement with Physicians Mutual, as I mentioned, you know, Original Medicare does not cover dental services. You are used to having those. during your working years on your group plan. As you mentioned, that's not going to transition with you. So Physicians Mutual is willing to give you the most comprehensive dental plan on the market at a 5% discount, just as saying thank you for being a Medicare supplement policyholder. So you can use that discount as an opportunity to bring up that dental cross sale. And for those of you that haven't ever done one of our e-apps, very easy, very intuitive. And when you go, let's say you do the MedSup first and you submit the MedSup, then it's going to give product offerings of whatever products are available in that state. Let's say it's dental, you click on dental, and then all of a sudden everything that it can pull from the MedSup app is already pre-populated in the dental application for you. You just have to pick the plan, ask a couple of questions, get a signature or two, and in about 90 seconds, you've got your dental cross sale. Not to mention, we've got some great MedSup bonuses and some dental cross sale bonuses. I know the folks at Pinnacle said they were going to put some of that stuff on the website, so be on the lookout for that. Okay. And then there is a dental reference manual. So we do have a customer-facing dental brochure. This is more of the minutia of every single procedure that we offer, whether it falls into preventive, basic, or major, and then the percentage or set dollar amount depending on the plan that coincides with that procedure. So it's a great reference, as you know, the title Dental Reference Manual implies. Would certainly not use this in every appointment. And then last, but certainly not least, guys, before we take any questions, now, granted, I understand this does vary by state and by market with some of these other carriers, but just kind of looking at face value, very comparable in premiums. You know, we are the only one I'm aware of with no out-of-pocket max, one of very few, if not the only one without a deductible. Again, yes, we do have the 12-month for major care. We do not waive that waiting period. Hopefully, seeing that we give away 70% on major care with no cap, you understand that that would just not be possible to give away from day one. You know, our percentages, especially on the major care, are at, if or near, if not at the top of benefits paid. You know, again, massive network, vision and hearing riders. And one thing that I did fail to mention earlier is if someone uses a network dentist, let's say they use a network dentist and they needed a crown and it hasn't been 12 months yet, so they're not quite into that major care waiting period being over, but they still go to a network dentist, they would still receive that discounted rate on average, which again is 36%. So they certainly still would be getting some benefit on major care even before the 12 months with that network discount. Okay. So guys, I know that was a good bit in a short amount of time. Let me stop sharing my screen. I guess I did so successfully. Rob, you still there, brother?
I am. So it looks like you had 2 questions. Someone was asking if the product is available in New Jersey.
The dental is, the MedSup is not.
And another question, is there a list of network dentists available for each state?
Absolutely. So if you just simply go to www.physiciansmutual.com, right there on our home page, the customer facing page, and you click find a dentist, you can search dentists by specific cities, zip codes. Yeah, you can see all of that.
Awesome.
Absolutely.
And I am not seeing anything else, man. So I think, look, you did a great job. And you know, I can attest to this too. I mean, I've been selling dental for a while now. I don't think there's any product on the market where you can literally say, hey, you know, I can get you a product that does not have a yearly limit, which is pretty incredible.
Yes.
The dental stuff adds up really quickly. You know, it's a great thing to have, you know, in your back pocket, especially with all the changes with Medicare over the past 2 years, you know, moving away from, you know, $3,000 and $4,000 of dental coverage. It really definitely makes an impact. And I got to tell you, the personal touch is there, man. Trevor will send you a text every Monday wishing you a good week. And I don't know of any other rep that does that with their agent. So, kudos to you, brother, for taking a kind of a approach of being available to your brokers, which you don't get that always with some of these reps.
Absolutely, man. No, I appreciate the kudos. And, if it weren't for y'all, I don't have a job. So certainly want to do everything I can to help you, to support you, whether it be answering the phone or your text messages when you need me, sending you the Monday morning text when you get in my rotation, welcome text, welcome email, text every day when you thanking you for whatever business you did for us. Certainly something that we pride ourselves on. And again, to your point, not only is it important for these cross sales for folks that are getting decreased dental benefits and stuff from the MAPD side and so on and so forth, but guys, I mean, y'all ain't getting paid on prescription drugs anymore. And I mean, as things are going, wouldn't be surprised if there weren't many commissionable PPOs left going forward. So it is absolutely imperative for you guys to continue to serve your clients and make the standard of income that you are used to making by having some really good solid products to cross sell, especially to your Medicare clients. And again, when you look at the innovative G, you look at the high deductible G, you look at the difference in premium from that and a regular G and N, and the wallet share that opens up for the customer to be able to get more coverage, and in turn you continue to be able to make a living so that you can take care of these people that need you, that are counting on you, that are depending on you. That is very, very, very important. So we got you.
Awesome. Love it. Well, listen, everybody, we are going to let you go. Have a fantastic rest of your Friday afternoon. Have a great weekend, and be on the lookout. We're going to do this again probably next month with a spin if you want to learn some more about some other Physicians Mutual products and the things they have available. So Trevor, thank you, man. We appreciate you. Everyone on the call, thank you. Have a great weekend.
Thank you, guys. Thanks again, Rob.
Thanks. Have a good one, guys.